area. So I'm just in the office. I hope we're ready to begin. Or are we waiting for some more participants to join in?
Yeah, we are starting with, we are already over the time. So we can start, I think. Uh, very good afternoon and very warm welcome to all the participants for this important webinar. As you are aware that Plex Council is organizing webinar pertaining to the issues of export as well as the anything that is challenging for the plastic industry. And hope all the participants are liking this Plex Connect webinar series that is ongoing. Uh, to begin with, before we begin, I request all the participants to keep your mic in a mute mode so that there won't be a disturbance during the webinar. Also, I request to keep your video on and avoid multitasking so that you can focus on this webinar because in one time you can understand the concept so that you need not to refer this again and again. So first to begin, to formally begin the webinar, I request our panel chairman of Consumer and Houseware Product of Plex Council, Mr. Dhruv Sayani, and he's also the director of Crystal Plastic and Metallizing Private Limited. I request him to give the welcome address and opening remark for this webinar. Thank you.
Great. Thank you so much for the introduction. Good evening, friends. I would like to extend a warm welcome to all participants of the webinar. It is indeed our pleasure to have all of you with us for today's useful webinar on importance of insurance and risk management for the plastic industry being organized by Plex Council. For the knowledge of the participants who have joined for our webinar for the first time, we are pleased to introduce ourselves as the Plastic Export Promotion Council of India, sponsored by the Ministry of Commerce and Industry, Department of Commerce. I would request Mr. Jayesh to please put himself on mute. Could the host, yeah, thank you. I was mentioning that, of course, this is being organized by the Plastic Export Promotion Council of India, sponsored by the Ministry of Commerce and Industry, Department of Commerce, Government of India, that promotes Indian plastic industry globally. I would request Mr. Jayesh to please put his mic on mute. Thank you. To support and promote the Indian plastics globally, Plex Council undertakes various initiatives, which includes organizing Indian Pavilion under the aegis of the Ministry of Commerce and Industry at international exhibitions, buyer-seller meets, reverse buyer-seller meets, knowledge webinars, representing trade issues to representatives of the government, authorities, and many more that we provide financial subsidies granted by the Government of India to the participants of various activities. We urge all industry members to take advantage of various new initiatives of Plex Council, such as this to subscribe for the free monthly Plex Connect digital magazine, register yourself for the Plex e-pages, join certificate courses on international business. Our certificate courses have been receiving a lot of response from trade participants as well as companies who want to scale up their skills and knowledge. So please spend some time, go through our course information, and try and participate in them, because we at the council are putting in great efforts to bring in the world's best, speakers, as well as companies, as well as trade partners to certify, teach, and train. Also, we are happy to announce that we are organizing India's first ever export focused exhibition for plastics, which is called PLEXCONNECT 2023, which will be held from June 15th to June 17th at the Bombay Exhibition Center, NESCO, in Mumbai. To know more about the upcoming activities of the Plex Council, follow us on the social media channels and download the Plex Council mobile app or visit www.plexcouncil.org. Friends, as we are all aware that the need to manage risk, protect people, and redefine strategy is increasing, and along with opportunities. For firms to operate as successfully as possible over long term, a well organized risk management strategy is very important. The basic goal of risk management is to identify potential hazards before they cause chaos in the system and plan ahead to deal with them in order to minimize their influence on your end business goal. Moreover, being a part of the plastic industry, we all should know how essential it is to understand about insurance and risk management. And we are glad to have experts on the subject today with us to guide all participants with knowledge and support on the importance of insurance and risk management. We are pleased to welcome our speaker, Mr. Arun Kumar Srivastava, Joint Director, Marsh India. He is an insurance industry veteran and comes with a rich experience of 34 years in the largest non-life insurance company of India, the New India Assurance Company Limited, including overseas assignment in the Middle East. We also have with us Mr. Ashwin Kiawat, who's the Vice President Energy Practice Pune, Mr. Karthik, Vice President FinPro, Mr. Darshan Parik, who's of course Facultative Reassurance and Marine Practice Leader, Mr. Prashant, Vice President of Marine Practice, Mr. Avin, who's Energy Practice Calcutta, and Mr. Ashirwad, who is a Senior Relationship Manager. Each of their profiles are on your screen. Once again, I welcome all the participants to this webinar and request everyone to take active participation to know more about insurance and risk management's importance. And we invite you to keep sharing your views and perspectives with us. And together, let's build a great industry for all of us. Thank you. And over to the Marsh team for further proceedings.
Thank you so much, sir. So, Arun sir, if you can help us with your opening remarks.
Actually, I'm not. It's not unmuting.
Mr. Arun, we can hear you. We can hear you.
Okay. Okay. Thanks, Mr. Chairman, Mr. Dhruv Saini, for such a lavish introduction. I am really obliged. So, honorable guest members and executives of Plastic Export Promotion Council, a very warm welcome to this webinar, which intends to exchange knowledge, experience, and expertise to give you more insight into the insurance, create awareness, and update you with the current market development, especially pertaining to the plastic industry. As said by Mr. Dhuru Saini, I have a very vast experience in insurance industry, around 35 years, both in domestic market as well as overseas market. But I firmly believe that insurance is something which evolves every day, and the landscape of insurance changes very rapidly and very frequently. The main drivers of the dynamics of insurance are consumer demand and innovations, plus regulatory requirements and compliances, their development, and also the geopolitical situation around us. When I say regulatory developments and requirements, compliances thereof, I mean to say all the regulators, not only regulators pertaining to the insurance industry. The regulators, other regulators are also connected with you, and their compliance may require a different kind of.
So we are unable to hear you. I think there is a.
You're on mute, Mr. Arun. Sir, you're on mute, so we are not able to hear you. You can unmute
Hello?
us.
Yes, it is audible now. Yeah, we can hear you now.
Yeah, so I was talking about the dynamics of the insurance. Basically, the insurance evolves every day, and the landscape of the insurance changes very rapidly and very frequently. So we have to keep pace with the changes in the insurance market and keep ourselves updated with the insurance market changes, regulatory requirements, and all those things. The Indian market, you might have seen that in the last few years have gone through a sea change, and one of the changes which insurance market has seen during the past is IIB structure of rating, which basically was introduced in the Indian market with a view to arrest the claim issues which insurance companies were experiencing during those days. But at the same time, it was very detrimental in the interest of the policyholders, especially those who spend a lot of money for risk management, risk engineering, and also for the maintenance of their risk. Coming to plastic industry has always been on the very high risk category in insurance companies, basically because of the past losses and the both in terms of volume and the frequency. So normally the insurance companies keep plastic industry on their decline risk. Decline risk means nothing but the underwriting authorities with some special designations. So the placement of the plastic industry rate risk at a appropriate rate was always a challenge. We at Marsh continuously strive to provide our customers a very delightful, superior experience by way of our placement expertise, our risk management advisory, our risk engineering, and more importantly, our support when there is a claim for the speedy settlement of the claim. Marsh also through its global network can provide you the global solution if somebody has some risk abroad also. So we can provide you a global solution under one umbrella, be it property insurance, be it liability insurance, or a transit insurance. Our team will speak in detail in ongoing webinar, but we can provide all kind of insurance solutions to plastic industry as well as other industries also. While our team colleagues will take you through the presentation, I wish to thank Plex Council for inviting us in this webinar and giving us an opportunities to showcase our expertise, our ability to manage risk, and also our ability to provide you all kind of risk solutions, insurance solutions pertaining to your industry. I hope that after this webinar, you will be enriched with more knowledge into insurance, more knowledge about the geopolitical situation, and also your thinking about Marsh. Thank you. Thank you very much.
Thank you so much, Arun sir. So now I hand over the presentation to my colleague Ashwin, who will give you set the context for the further discussions as part of this webinar. So what do you Ashwin?
Hello, everybody. So as Arun sir already spoke on the importance of the insurance and the risk management. Now let us understand why insurance and risk management is so important, for the industry or for for the people who are operating in a business environment or even other areas. Now, if we take a look at the slide, there are certain cutouts from the news where the fire broke out at the plastic industry, the plastic factory in Delhi's area. Then also the fire breaking out at other places. Not only that, even there were cyber attacks in the area through the malware attacks on the machines in several business areas. Like we have seen in the past, cyber attacks in the power sector and even the coal sector, or even the e-commerce sites. And even like several participants are operating in the export business. So as we all know, there was an evergreen ship which got stuck in the Suez Canal, and the cargo got disrupted globally for a couple of weeks. So yeah, the losses ran into $1 billion amounts. So it's very important, to look into these areas as to where the risk could arise from. So yeah, coming back to the next slide. Now this slide talks about the business environment
which is becoming so much complex and uncertain. Like even from the the participants, they are operating in this business of plastics industry. They know that they're already operating in an environment where there are several elements which are interconnected, and the risk could arise from various areas for the companies. So it is very important that there is growing awareness. There is an awareness which is developed in the internal organization among the people who are responsible for protecting the assets and for protecting what shall I say, the operations of the organization. And in that process, it is also very important that there is a proper coordination between several departments in the organization. Like there are technical departments, there are insurance, specifically insurance departments, there are finance and the legal departments, because the risk could affect the organization in various areas. So it is very important that there is a proper synergy between these departments, and the several departments should also be always prepared to handle the insurance and the risk management program for the organization. Like they should be prepared as to how there could be a structure which could be designed for the organization. Next slide. Yeah, when we look at designing the insurance and the risk management program, as we can see, like there are several what shall I say, the touch points wherein there is an interplay of the several elements when we design an insurance and risk management program. We look at the first element, which is people. It's so important, it's so important to protect the people who are operating within the organization. And also there could be areas where the organization is liable to the third parties who are interacting with the organization. So there could be third party liability risk, where the organization is responsible to pay an amount for any personal injury or property damage to the third party on account of their own operations. There could be also auditors, or solicitors who are functioning in the company. So there could be professional indemnity insurance. Then there are top executives, the critical directors and officers who are responsible for managing the operations of the organization. And there could be error. There could be, just a simple way we can say, there could be mistakes in terms of delivering any professional advice. So there is DNO, we call directors and officers liability. And it's also important to protect the people of the organization in the form of, there are employee health and benefits program like Mediclaim and also workman compensation. And coming to the asset side, as we know, asset, when we say, we are talking about the factories and the warehouses. There could also be like stocks involved. There could be factories where there are stocks stored in the factory or in the warehouses. It is important to protect those assets. So there are specific programs which are designed for that in the insurance industry. And there could also be business interruption. When we say business interruption, it's nothing but where your ongoing operations gets disrupted or gets interrupted on account of certain events in the business environment. So it is also important to look into those areas where the business could stop, where the client is not able to function or carry on with the business on account of certain events, which we will look into in the upcoming slides. And the third and the last element is transit. I think many of the clients, many of the attendees would be involved in export oriented business, where there is transit of the cargo from even within India or even outside of India. I think my colleagues on the cargo will speak in the later slides. Now coming to the next slide. Yeah, here we are talking about there are several risk issues. Just to quickly go through the risk issues, as you can see, there are asset protection, where your property could get damaged, where even a factory is being constructed. So it is important to go for the construction insurance, and for the erection insurance. There could be also cyber risk involved, as we know that the business community is getting increasingly aware about the cyber attacks. So there are several ways in which the company's IT systems which is at threat and could get impacted by the cyber attacks. Also logistic risk, we see there are, there are solutions in the form of end-to-end marine insurance, where the logistics are insured with the right amount, right type of the products. And there's also logistic risk management, which is carried out nothing but it's a review of the risk, like how much is your business, how your business could get impacted on account of the transits that are involved. So yeah, there are several areas which this slide talks about, where there are risks as well as the solutions for different areas. And coming to the next slide, this slide talks about the property insurance. As I said, property is nothing but the assets, which are your factories, warehouses, stocks, offices, in terms of, when we talk about plastic industry. So there are events in the business environment, in the world, where it could arise in the form of fire. There could be lightning attacks, like lightning strikes. Uh, Aircraft damage, very least likely, but yes, still there could be an impact. There could be impact damages, which many of the business entities would have come across. And there are also act of God perils. So act of God, basically, where these are not man-made and which arises naturally, like earthquake, floods. I think we have no need for any explanation on these risks. I think there are several flood events like Mumbai floods, or even internationally we speak about Thailand floods, which like for Thailand, of course, there was overall worldwide impact. And there could be flood events where the factory could get inundated with the water, and there could be all the assets which get destroyed. There are also like machineries which the factories could be having. Like there are in plastics, there are injection molding machines, then blow molding machines, wherein they could stop operating on account of the overheating, overpressure, also short circuiting. There could be arcing or even surge in the electricity. And there could be several parts, like the gear parts, or the machineries, as we know that they're all operating at very high vibration and with high pressures. So there are specific products like machinery breakdown insurance, which is available, which could be bought by the clients to cover their important or critical machineries, I would say, or even all types of machinery. Like there could be air conditioning plants, so even machinery breakdown could be bought for those. And there are specific property insurance policies, like property all risk policy for the entities which are less than 50 crore. The insurance authority has come out with uh, BLU BLUS product, which is Bharat Lagu Udyam Suraksha product, which could be purchased by the entities whose turnover is less than 50 crore, or more than 5 crore and less than 50 crores. And then the last one is loss of gross profit, which basically, as we know, it's also a part of the property insurance policy, wherein their business interruption losses could be insured on account of the fire, the property getting damaged, or even the warehouse catching fire, and wherein the client loses the stocks. So yeah, now I will hand over to my liability colleague to speak on the liability insurance. Thank you.
Thank you, Ashwin. Uh, while Ashwin spoke a lot about property risks and Arun sir gave a brief introduction on the various risks overall associated. Now, just coming to another context of the way we see, perceive, and manage risk. Property risk is something which is tangible. You can see it, touch it, feel it, and you can put an exact value to the nature of claim and the amount of claim. Something which is a little more complicated in the sense that you cannot estimate ever what is the risk that is on you, right? You will not know what kind of litigation or what kind of liability is something that we are exposed to. You will never have an idea about what could be the potential damage that we face, and you'll never be able to put an exact nature and quantum to that particular risk. So I've divided our liability exposures into three sections. First being the risk on management, the second being the risk due to the usage or the development of your and the third being any risk due to a cyber or a crime, right? And very rightly, Ashwin has pointed out the importance of cyber these days. That would be the third aspect that we go through, right? So when we talk about management liability, so as a management, as the CXOs of the company, as the directors of the company, we are required to take decisions for our operations, right? And sometimes these decisions may not be black and white. You will have to count on your past experiences. You'll have to take an understanding of the current situation, the current market, the current macroeconomic parameters, the current industry, and you need to take decisions, right? And as a company, we are always accountable to various shareholders and stakeholders. Okay. So at any point during our decision making, if any of these decisions may happen to result in a loss, okay, may happen to result in a situation where we have either lost money or the decision has not turned out to be as good as what we expected it to be, thereby resulting in any of your shareholders, stakeholders facing a direct financial loss. That loss is directly going to come on you as liability, as litigation, right? Now, probably we can appreciate that this cannot be quantified in pure numbers. It's very difficult to quantify these losses. But why is it important, or rather, why is it gaining more importance these days? Is primarily due to the fact that one, shareholders are becoming more and more vigilant. They are becoming more and more active. They're becoming more and more aware that there are avenues for them where they can make good their financial losses. Second thing, it gives the confidence to your own directors, officers, or managers, supervisors, whoever is in a decision-making role. It gives them the confidence that you can take a decision, keeping all factors into account, taking all factors into account, and you still have that confidence that if there is something that goes wrong, I am protected through insurance, right? I don't have to fear, I don't have to think 100 times, thinking, what if the decision goes wrong? We will do all our due diligence, but even if something goes wrong, I'm protected. I don't have to fight the battle on my own. I have enough insurance to protect my legal costs, protect any damages that are bestowed on me because of these things. I've given you some events. There can be product service issues. It can be a man-made disaster. There can be an environmental issue. Pollution is one of the biggest issues that we face these days, and there's a lot of regulation and there's a lot of supervisory bodies who kind of have this perception that a manufacturing company is polluting the environment, right? And we have seen a lot of Indian rivers that have been polluted because of ineffective or irresponsible waste disposal. And you can all be sued for that. The government can sue you, the regulator can sue you, the supervisory authority can sue you. So all these holistically, these claims that come from your regulator, your shareholder, or any other stakeholder do get covered under a policy which we call as a directors and officers policy. It also includes ESG, which is a talk of the town. There are certain ESG audits that you need to conduct. There are certain standards that you need to maintain. And nowadays, this has become so important that almost every directors and officers, underwriter or insurer is seeking clearances and clarification with respect to your own ESG audit and ESG requirements. Another very important thing to consider here is there is a potential exposure you have from your employees as well. There is a lot of talk regarding discrimination. There is a lot of talk regarding racism. There's a lot of talk regarding unfair employment practices like termination, wrongful termination, denial of a promotion, harassment, molestation. So all these factors, all these gamut of unfair employment practices can be covered under something called as an employment practice liability insurance. That's broadly what your management liability covers you for. Covers you for external shareholders as well as your internal employees for various factors. I'll delve into more details if required, and if there are any more questions, I'll be happy to answer them. But I'll just try to touch on everything before we get into the Q&As. Next slide, please. The next biggest risk that we thought we should talk about here is your risk and your completed operations. Right now, you're a product. You're in the plastic industry. There are exporters, there are manufacturers, there are factories. So on the whole, you are responsible for the product you're either manufacturing or selling. Tomorrow, by the usage of your product, if there is some kind of injury that happens, either a bodily injury or a property damage, say there's an explosion by using your product, say there's an injury because of some of the fumes that the product has. Okay. These kind of risks again cause a liability related to bodily injury and property damage, right? Those kind of liabilities due to the usage of your product or due to a product that is unsafe can be covered under insurance. We have insurance policies called as a commercial general liability, which can pick up such kind of risks. Also, if you're in the manufacturing sector, if you have plants, if you have factories, and if there's an event that happens in your factory, if there's an explosion, for example, and that explosion happens to damage part of your surrounding property as well, right? There is a claim that you're liable for, which comes in from the owners or users of the surrounding property. That also is a potential liability exposure from a third party property damage perspective, right? That is also a significant liability risk which can be covered. Now, if your product has been deemed to be unsafe or found to be unsafe, and you're required to recall the entire batch of products, right? If you assess that there is a potential threat by using my product, nothing has happened so far, but I really have a feeling that there is a potential threat by using my product, and I proactively try to recall all the products. Right? So all your cost of recall, all your cost of product destruction, sometimes even product replacement also can get covered under a combination of policies, which we call as a product recall policy and a product guarantee financial loss policy. Right. Next slide, please. The last risk that I would like to touch upon, and this is a new age risk. This is something everybody is looking at very, very seriously these days. You would have heard umpteen number of instances where this company has been hacked, that company has been hacked, there is ransomware demand, NotPetya, WannaCry, so much of extortion taking place, cyber crimes happening, countries or states engaging in cyber crimes against other states and countries. So cybersecurity is the talk of the town. Any breach in your computer systems, anything that affects your operations, any cyber incident or a malware incident that practically halts your entire ability to operate or your ability to manufacture goods or your ability to even create a simple SAP entry or a purchase order, right? Every hour you're not able to do these things is potential revenue loss for you, right? And that kind of revenue loss, that kind of loss of gross profit, business interruption is something that, you know, a cyber policy would be covering you for. Okay. And business interruption may be the last item in the value chain, but what do you do in the immediate aftermath of a cyber attack? None of us are experts on cyber here. While we all have IT teams within our companies, none of us are prepared to handle or even make a response when there is a cyber incident. Right? What do you do first? You try to identify where it happened, how it happened, you do a root cause analysis. And for that, you need to engage third-party vendors, third-party forensics, right? Those don't come cheap. And these are all big four firms who are charging you by the hour. Okay. So your entire first party expenses itself is going to be so expensive that it can take a direct hit on your balance sheet. It is all eating your online at the end of the day, right? So it's very important for us to have protection. The extent of protection can be decided, but it's very important to have ourselves protected because this is a risk that is ongoing. It is only increasing by the day, and there are no signs of it slowing down. The hackers are always 2 steps ahead of the best IT systems that we are able to produce at this stage. This is on cyber. There is also a risk of employees going fraud, employees becoming rogue. So any direct financial loss you face because of an act of fraud by either your employee, it can be a third party, it can be an employee who's colluding with a third party, it can be a phishing attack, it can be a targeting social engineering fraud, it can be impersonation, it can merely be unauthorized access, or something as simple as stealing money from the safe, right? And all these things, like the cyber exposures, these also eat into your bottom line. These also are directly affecting your NOI margins and your. So for these, there is a policy called as a crime policy, which protects us for any direct financial loss due to an act of fraud or dishonesty committed by an employee, committed by a third party, or committed in collusion, right? So hand it over to the next colleague to take you through marine.
Thank you, Karthik. Good evening, everyone. Thank you, Mr. Dhruv, and the respected panel members here, and at the same time, the participants for joining on for this lovely session on insurance. My colleagues have already touched upon a couple of big ones, the property and the liability. But this is the one which is quite interesting, as marine goes way back, being the first and the oldest form of insurance way back in 1350s kind of thing, whereby typically we used to cover the transits of the goods basically. Now, when I look at marine cargo insurance, typically the first thought comes marine means it's a sea journey, but I would just like to clear that misconception out. So marine cargo is something which provides you coverage for physical loss or damage to your goods during transit. Now, that transit could be road transit, railways, seaways, airways, post, courier, and it could be multimodal together, which is a bit of transportation, then includes a sea journey. So this transit covers you from end-to-end perspective from your supply chain, depending on your Incoterms. So what I'm going to take you through today is a couple of slides on the coverages and how these things work. Then my colleague Prashant will take you through a couple of claim scenarios and how does that affect you as an industry and as one of an exporter or a manufacturer or a trader and things like that. So can I have the next slide, please? Right. This is a quick transportation flow chart. I'm sure most of you would be aware, or your logistics team would be aware about it. But the reason I'm trying to put this screen up here is this slide is the importance about understanding how things can go wrong during a transportation. Typically, we as exporter, manufacturer, or anyone who's their trader assumes that the goods are going to be picked up from my place or the named warehouse, and it's going to be delivered in one go. But if you can see, the whole transport system includes 17 different operations here. So when I say about 17 different operations, that means the more the hands touch a particular consignment or a container, the chances of things going wrong do happen. Obviously, we have evolved now in the logistics flow. The shipping lines have changed. We used to have some vessels which used to take around 1,000 containers. Today, we are sitting with a shipping line which takes around 22,000 or 24,000, to be honest, 24,000 TUs in one vessel. So we've evolved drastically. So the supply chain has changed, but still we saw last year what happened with Swiss Canal. No one ever expected something like this. So things can go wrong. And for that, insurance is something which protects you. So when you look at this particular transportation flow chart, we start with right from the stage where this flow chart will tell you exactly from the manufacturing point where the goods are prepared kind of thing. Then it's stored for some period of time. Then it's been pushed out for a storage, which then goes into a land journey, which is a road journey from the transporter's go down or warehouse to the port. When you go at the port, that's where the loading operation starts. That's where the risk is there, which we talk about the stevedoring leaks, or there could be at the port some natural calamities which happen. Like the East Coast is quite famous of India for a lot of cyclones coming every year kind of a thing. So the risk starts there as well. Then while loading onto the ship, there could be loading, unloading lists which are there. Then when the ship moves over its journey of a 30-day, 45-day, 65-day, 70-day, 90-day, depending on where the destination is, things can go wrong out there. And then once the same process comes down, it becomes the unloading stage, then moves to the other part, to the storage, to the designated warehouse, and thereafter to the final customer. So you could see that there is one sea journey. There are 8 movements to and from the storage perspective. There's a loading operation, discharge operation, land journeys, land loading, and land unloadings kind of thing. So if you look at it from that perspective, things can go wrong at various stages kind of thing. We have seen in the past, there has been claims either while loading the shipping company which is trying to load containers, the stacking goes wrong. If it's not lashed properly, things can go wrong during the sea journey. We've seen general averages and things which are happening. So things can go wrong during this point of time, and marine insurance is something which will protect you against all of these risk perspective. Can I have the next slide, please? Right. So what I will do is I'll call in my colleague Prashant, who handles claims for us, and he can take you through the common risks during transportation. Prashant, over to you, please.
Thank you, Darshan. Good evening to all. So, as of now, we have seen the mode of transportation, the flow chart of transportation, and now you can understand that exposure is so high. So, even though nobody wish or nobody want that something goes wrong during transportation, but we always see that something is happening somewhere in the part of the world. Probably it is our experience, or it is experience of our business colleagues, or experience of business other businesses. It happens everywhere. So normally we can foresee this type of risk. We can classify this risk in one of the social or criminal risk, which comes like either your cargo prone to the theft or somebody pilfers your cargo. It may be a non-delivered cargo. You send this parcel, but your consignee or your buyer did not reach to your party. It's not delivered, so it was lost in somewhere. So we have seen this, even though your full truck has got hijacked. So even driver of the truck has taken the cargo to somewhere and he has sold within the transit. So it is a big exposure. Again, even though it is not intentional theft or intentional misplaced, but somebody can even lost it, somebody misplaced it, or some forgot to pick up, forgot to deliver. This could also happen, and then eventually you may face the losses. So this is all we can call social or criminal intent or classify as. Similarly, since we have seen that there is a large chain or large flowchart of these operations, there could be chances of damage during loading and unloading, because loading and unloading not happen at your or the concerned premises. It may happen during transit also, because there is a change of hands, change of vehicles, change of vessels, change of containers also. So your cargo is handled multiple times at multiple event, and which increase the loss and vulnerability of your damages. So again, we have seen this. There is when is lifting, the container is lifting by hooks or cranes, or even cargo is lifting by hooks. There could be some damages. The chain got snipped off, and then there is a losses. Even there is a ingress seepage of water. We have seen, especially we have seen in monsoon areas, monsoon time. Even though you take a lot of care, you send by the covered tarpaulin, covered vessel, still there is an instance that due to the heavy monsoon or heavy weather, there could be seepage of water inside, and your cargo got damaged, your raw material got damaged, probably your finished material got damaged. Now in plastic, probably there is not chances. Finished product, there could not be chances, but still there is chances that your raw material got damaged and it is not used for the mint. So likewise, again, there could be rough handling by the transportation courier guys or the handling people, laborers at port or anywhere. This could be chances. So this we seen again, the major or catastrophic losses will happen when there is unfortunate accident or event. Likewise, there is a fire in vehicle or fire in vessels. The last month we have seen there is a fire in vessel during Colombo. So at least 5,000 containers were got affected. So even the sinking of vessel we have seen. A lot of time you can see this. When we are traveling to some highways, we can see that a lot of vehicles are got overturned or collision happen. So there is a massive loss of your cargo, and it is a catastrophe basically. So that time, even if the ship is encounter the heavy weather, we have find that even a lot of containers got affected because of entry of seawater on board of the vessels. So these are a lot of type of damages or events we have seen, we can envisage, and we experience also during day-to-day handling. And I'm sure you must have seen this while your operations, or you might have heard about this is happening with either with you or with someone, and ultimately reaching even losses. The next slide. Apart from this, we have seen there are a lot of losses. Now, as my Darshan has explained, marine insurance take care of physical loss or damage to the cargo. But even apart from the physical loss, we have seen there are your business, your transportation is also supposed to or prone to the different type of risk also. There could be insufficient or inadequate contract with your carrier. Probably he may not get responsibility after the loss. He may not even response you at the time of loss. Even you can stuck up with some compliance or regulatory aspect. For example, sometimes fumigation is required to get us for exportation. Not probably related to plastic, but I'm just giving an example. And then probably if there is no fumigation, your cargo may get seized or confiscated by the government. And sometimes we have seen that
Krishanji, your mic is somehow muted. We are not able to hear you.
these are not the losses directly, but these are the indirect losses which may not be covered by insurance. But we just thought we'll give you overview of different kind of losses or risks which your business may prone to these losses. I'm sure you must have experienced some at some, even though you don't watch or nobody want to have happen this. Any question on this or previous slide?
We'll take the questions
I think
together.
we have
at the
Q&A
end.
later, I think.
Later on.
Okay, fine. Okay, then we can move to the next slides also. So typically, what we have seen, what could be go wrong, what could be the chances of risk, what could be damages. So now, how the insurance will get protected you? So insurance normally comes protected. So normally, in today's fashion, this marine insurance typically comes with the all risk coverage. So it covers all type of risk or damages or losses happening in the transit, which is physical loss or physical damages, which normally comes with the in insurance parlance, we call it all risk policy, that is a risk policy. So if it is an export oriented business, purely export, that is sea leg, then it comes with the ICC clause. Or if it is a purely domestic transit, then it comes with the inland transit clause A. So why I'm telling you all these things, because it is too technical, but obviously we sure you must have some policies with you, so you can compare your policies, you can compare your coverage, and you can also see whether you're adequately covered or not. Because when you see all risk, then you're rest assured that yes, the policy is covering all risk. However, there are some exclusions mentioned in the policies. Now, this is a counter statement. If I'm saying all risk also, I'm saying there are exclusions also. So why so? Because these are exclusions which typically inevitable, or these are not the insurable risk, and that's the reason the insurance company tends to not to have this risk on this policy or cover to this risk. For example, some of the common exclusions we are just talking about: the willful misconduct of your insured. That means during transportation, if your employee of your agent or something done something willfully, not negligently or not accidentally, some willfully, then it is not covered because it is not your transit loss. For example, sometimes the cargo is prone to happen. Like if I import some oil, so obviously there is some 0.1%, 0.01 going to be evaporated or going to be lost, or it is stick at the pipeline or vessel holds like that. So these losses are inevitable losses. This is not called as a risk or unfortunate misfortune. This is the type of your trade. Again, the losses or damages caused by insufficiency of packing also excluded. So why so? Because if the packing is not good, if packing is not adequate, then insurance companies thought that losses is bound to occur. It is inevitable. For example, if I send the cargo with open truck during monsoon, what is going to happen? It is obviously going to happen. So it is not risk basically. It's not. We cannot say that unfortunate. It is a fortunate. It is going to happen. So this is not going to cover. Similarly, if I use the vehicle which is not suitable for trade, or if I use container which is not suitable, which is not adequate, again, it is not get covered. See why we are telling this thing? Because you have to take care so that you should, even though you have insurance, you should avoid all these instances. So you should not feel that if I have got insurance, I will get covered all these things. So just try to avoid all these things. Take care while you're transportation, even though you have risk. So you will not have any adequate issues with your insurance or problem. So next slide. So now we have seen what are the losses, how the coverage can help you, what are the exclusions are there. Now you might have the policies, or you might want to consider the policies. So if I want to go for my mediclaim, no, I have to consider only two aspects. One, what is the number of family members, and probably the limit of insurance. This the aspect. If I consider, then I can have the optimal policy or our policy with me. For marine, you have to consider a lot of different factors. So we just talk about the different factors which will help you to design your policy better, or if you have policy, you can go and cross check whether you are adequately covered or not adequately covered. For example, now you have taken the policy. So normally it is clearly mentioned in the policy what it is going to cover. For example, if you are in plastic industry, supposing you're a manufacturer, so whether your raw materials are covered, whether your finished goods are covered, or only some bulk material covered, or only some finished good material, it is also mentioned. Sometimes what happens, you take policy, and and it is mentioned that everything is covered as per your trade. But if you import some machinery or you bought some machinery, the machinery is called capital goods. Normally, it is not considered as your traded items. So, and if you feel that it is our all transits or our imports are covered, but in the case of loss, insurance company will come to you and tell you, no, this is your capital goods. This is not come under the purview of this policy. So you have to be very careful while designing your policy, drafting your policy, and assuming that what is covered or not covered. Similarly, insurance responsibilities. Now, this marine insurance, there are multiple parties are involved. Likewise, buyer is involved, supplier is involved. So, who can buy insurance? Technically, anybody can buy insurance. But then what is the point where we will define? It's called Incoterms or your contractual terms. So, as rightly the 2020, after 2020, the Incoterms 2020 is now in the trade. So this is give you the responsibility at which party to get the insurance or party to have the insurance. For example, I'm buying the goods on CIF basis. I'm importing goods on CIF basis. Then obviously I'm already paying for the insurance, and it is a responsibility of supplier to have the insurance. However, if you are sending on the ex-works basis, so it is a responsibility of your buyer or consignee to arrange for the insurance. Sometimes you sell the goods on FOB basis. That is your responsibility is up to the boarding only. So what normally we think, once it is boarded, then I don't have need to have insurance. But still you are prone or you're exposed to the losses which may happen during the domestic transit, or sometimes it happens that your buyer is refused to pay you. So you need to check whether you're adequately covered and for your insurance or otherwise. Similarly, mode of transit. Likewise, we see that everything is covered, but sometimes your policy is not covering railway. Sometimes your policy is not covering by air, or you will not come by the sea also. So what we are seeing sometimes some businesses are having transportation or having sending the goods by the inland waterways or coastal waterways, and if policy is not covering those, then insurance will come to you after time loss. No, this is not covered. So you need to see what is your logistic and whether your insurance is adequately cover all these logistic things or otherwise. Similarly, we can have sending limits. Now, even though you take the policy for probably your turnover basis or your declaration basis, it might happen that insurance companies are trying to freeze or trying to cap your per sending limit. For example, now they will say for per shipment, your limit is 25 lakhs only. And if you're sending the cargo about 25 lakhs or 50 lakhs or 1 crore or 2 crore, and if something goes wrong, likewise, if container got lost or there is a fire on board a vessel, or your vehicle has toppled and or collided and everything is lost, you will only get covered up to the limit mentioned in the policy, and then the remaining would be your loss, which will not cover even though you had the policy with you, even though insurance company is ready to pay you. So you need to check your adequacy of what your sending limits, what are the limits for the storages, all things you need to check. Now, payment terms. Normally, payment terms, why we want to suggest, because sometimes you are sending on the FOB basis or FOB basis. And then that time, what we thought, probably once I get the payment, I'm not on risk. But believe me, we have seen the cases where your consignee or buyer, after delivering, he's refused to pay you. They will say, no, I received in damage condition. Although I know it was my responsibility to arrange risk, but unfortunately, we forgot to take insurance and we will not pay you for this. So at that time, you have to have some coverages, contingency coverages on your policy. You need to check whether your policy is still covered for that. So those things you always need to consider as per your payment terms, your mode of payments, whether your cargo terms. So these are interrelated. So when you evaluate all these things, you can have the actual or adequate policy with you. Similarly, nature of trade. Sometimes you buy on the high seas vessel, you sold on high seas vessel, or probably mercantile trade. Now, a lot of policies are excluding these transactions. So even though you thought you are adequately covered, but because your business, you know better, and no insurance will not. So you need to check whether you're adequately covered or whether there is the provisions, or if there is the contrary provisions mentioned in the policy. So all these things you need to consider while taking the business, while having the policy, or at least you can review your existing programs also with these factors. Now, policy period. So typically, marine is some different. Like, say your property policy or the annual basis. For example, if you're taken the policy on 1st January and this is annual policy up to 31st December. So if anything happens between your policy will get covered. But marine is not typically the period based. It is always a voyage based. So if the voyage starts between that, then only it get covered. So you have to have the insurance before your transit starts. it will not be possible that if you can get insurance after it's very difficult, and insurance company have a lot of restrictions. So you have to have insurance before your transit starts. So you need to plan accordingly. You need to have your things ready at that time.
So thanks, Prashant. I think what we would like to summarize here with a marine insurance perspective, this slide, I think if everyone, whoever has a policy or who doesn't have a policy, this is a good summary slide to take away with you. This covers up everything. Obviously, marine insurance is vast. There are a lot of coverages, like the example which Prashant gave you about the payment terms. There are different coverages. We as Marsh do provide different coverages and clauses which assist you in your placement of the policy as well. But a structured policy is a marine cargo policy, which is ICCA, which is the first part of it. And thereafter, you need to check all the other clauses which are mentioned in front of you. So this is what, in summary, is all about marine cargo insurance and how it can protect you during anything going wrong, which is a physical loss or damage to your product or goods during transit. So that's it from us on the marine perspective. Ashirvad, over to you guys. Thanks.
Thank you, Darshan sir. Thank you, Prashant sir, for those insights into marine insurance. We move on to the next slide, which is on the approach that you should adopt towards designing your insurance program. Many a times, one of the biggest mistakes in risk management is that we look at risk in silos. A holistic approach towards your risk management and your insurance program is when actually the optimal results can be achieved. We do that for almost 7,000 clients of ours, wherein we sit with the client, understand the business, identify the key risk, try to quantify them. Our engagement with over 7,000 clients gives us access to a lot of benchmarking data, so we can tell you what are the best practices in the industry. Once that is done, you need to address those risks once they've been identified. So we devise risk transfer strategies, primarily insurance. Then we go on to identify who would be the carriers of the risk, identify the markets, who would be the best suited to actually cater to your insurance needs. Another aspect is, doing a price discovery. So it's about putting a right price to your risk, an optimal price, which actually then only the benefit of insurance is actually derived, that you have the right price and the right risk is transferred. The value of the insurance program, as all of you would agree, is realized when there is an efficient claims management process in place to address and disperse your claim as soon as possible and in the right spirit. We do that. We have a strong claims team which assists you in addressing your claims in the right time. Another aspect is many of our clients see insurance as a one-time exercise. There are not regular interventions in the course during the course of the policy. The last 2 years have taught us, the fluctuation in commodity pricing and the values of essential commodities have essentially, played havoc all around. The foreign exchange rates, currency rates, they have been fluctuating all around. We need to see and intervene at the right time to see whether the insurance policies which have been taken, let's say 6 months back, are the values right? Do we need to intervene and restructure or enhance the limits? So having the right partner in the entire insurance life cycle is important. And as Marsh, we proudly say that we are the world's largest broker. Even in India, we place close to $60 billion of premium annually throughout the globe. We're proud to say that we have 90% of the Fortune 500 companies are our clients, and we have strong workforce, experts. As Darshan is a marine head. Ashwin leads, is a property expert. We have underwriters, we have claims experts. And we bring in insight from various countries. So always, you can rely on a Marsh to deliver the right solution for you. So that's it from our end. Naman sir, over to you.